Now, there are a couple exceptions to this. If you're a charity, even if you filed articles with the state to establish your existence, you do not have to file reports as a result of the CTA. There also is an exception for larger organizations, which it defines as an organization that has 20 or more employees and revenues of $5 million. So if you have 40 employees, but your revenue is only $300,000, you still could be subject to filing as a result of the CTA. And you also see an exception for entities that are already subject to really strict measures when it comes to its governance. So for example, a bank wouldn't be something that would have to file as a result of the CTA because it is already subject to strict regulations and requirements as a result of being a bank. Additional exceptions include those who are minors. So we talk about this concept of beneficial owners, but if that beneficial owner is a minor, they don't have to report. And there is an additional exception for future beneficiaries and inheritors. So for example, if you are a person who could be considered a beneficial owner of a trust, meaning that at some point in time, the owner of that trust or the grantor of that trust is going to die, leaving those assets to you. If you do not have substantial control over those assets in the here and now, and you are a future inheritor, you would not be required to file as a beneficial owner. And while we've talked about the concept that a trust could have an asset that would require it to report, if they do not, then there is an additional exception for trust as well. So if the trust does not in and of itself own an entity that would be required to report, then that trust is exempt from reporting. So now that we know about who has to file and who doesn't have to file, let's talk about the concept of beneficial ownership.